Good morning, everyone, and welcome to the Nixu results review for first half of 2018. We are here in Helsinki, physically present, but we are also webcasting this all over and hopefully having a good audience in the webcast. My name is Petri Kairinen. I'm CEO of Nixu since 2014, and I have a pleasure of presenting the results this time. Overall, this was a period of strong growth, again, plus 34% overall, and we signed several large cybersecurity partnership deals, which are according to our strategy, where we aim for larger clients and a more holistic service portfolio towards these clients. Summarizing this first half, our revenue was 19.5 million euros, which was a growth of 34%, as I mentioned earlier. And the organic growth was 17%, and the remainder was from the earlier acquisitions performed in 2017. Revenue of managed continuous services, which is also a strategic focus in Nixu, was 126%. The EBITDA was a low, minus 663,000 euros. And it included some non-recurring costs, mainly from the main stock exchange listing, and the adjusted EBITDA was minus 308,000 euros. And as you can see from the EBITDA, we continued our investments into the growth, as we've said that we are going to do. High point was, of course, signing of these several large cybersecurity partnership deals, which I will touch on later a little bit. And we also published our refreshed strategy, which focuses more on the cybersecurity of digital transformation. We had a capital markets day in May, and those materials are also available on the Nixu investor site. If you look a little bit back where we are right now with our strategy and in relation to the refreshed strategy as well, we can see that during the strategy period we've been quite focused in delivering things regarding these three strategic initiatives that we have. Becoming international, meaning growing outside of Finland. By the end of first half, we ended up in the 38% of our revenue coming from markets outside of Finland, or from clients outside of Finland, which is a considerable growth during this time when practically all of our revenue came from Finnish clients. Developing scalable services, meaning turning from consultancy into a more managed services provider. We've managed to grow the revenue share from 1% in 2014 into 9% from managed services. And as said earlier, we grew over 100% in this area, so the growth is far faster than the overall growth of the company. And at the same time, of course, we are a cybersecurity company with professionals in our team, and we want to be the best place to work for professionals. And in that area, we managed to grow our team size as well to over 350 people by the end of this first half. And if you look at this cybersecurity partner approach and what we are aiming to do here, we announced three main deals. The first one was 1.2 million euros industrial IoT cybersecurity services agreement for this year, and it's presumed to continue. So it's not a continuous deal per se, but we are expecting that to continue in the next years. The next deal in springtime was 3.9 million euros for IoT monitoring and cybersecurity services in general. And then the latest one, after actually closing of the first half already, we announced this 15 million euro cybersecurity integrator frame agreement, which is actually the largest agreement ever made by Nixu. So definitely a very sizable for us. And for me, this is of course a result of a work that we've been doing for several years already. And of course, we've signed deals for partnerships earlier, but they haven't been this sizable. And with this size of the deals, I think it shows the trust that the clients are giving us in a way that we are trusted as a holistic provider of cybersecurity services. And as in the case of this latest case, when we are calling cybersecurity integrator, that was a term that the client wanted to use. The idea there is that we will be the main partner for cybersecurity, and all the other cybersecurity providers will be subcontracted through us. So we will be the hub hub for providing those services. And I think this highlights quite nicely this partner approach and this holistic service portfolio, and also being technology vendor independent, meaning that we are a trusted advisor for the client, and they think that we are able to handle this whole spectrum. And also, I think being a dedicated cybersecurity company, meaning that cybersecurity is the only thing that we do, gives us also a position as a trusted third party in relation to the client's other providers, for example, IT vendors or so on. So we can be trusted to handle this approach. And I think this, if you look at this traditional strategy triangle of product, price, and client intimacy, I think our strategy highlights quite nicely that in relation to global cybersecurity companies, that of course are much larger than Nixu is and probably can show a nicer service portfolio and so on. I think our competitive edge is on the client intimacy. In those markets where we are close to the client, we are able to provide talented consultants, good consultants to work with the client, and we are there when needed. We are not there just on the paper. And that's I think is a very, very important. That's why the clients are trusting us. And then, of course, the other thing where we've gained a good notions from our clients has been the service approach, that we are not approaching problems as independent projects or audits or red teaming or whatever, but we approach the whole thing as solving the client security problem. We provide a service that's intends on the long run to serve the client's problems, not to point out the errors that the client might be doing. And I think this is the judging to healing approach where we want to really help the client to succeed in their cybersecurity, not only to pointing out the errors and so on. And I think this is helping us to gain the trust. Obviously, winning these sort of deals is not cheap. It's not inexpensive, and the workload that we have to use for the sales cycle in these type of cases is very considerable. I think the 50 million euro deal, we spent 2 years in the actual proposal process, and the third year we started selling the idea of having this sort of contract, and then when the client actually initiated the RFI process, that was 2 years ago. So these are quite long cycles, but of course then again when we get into these type of deals, they tend to continue for quite long times. But it's of course costly when we are getting these. But the good thing is that when we are in these type of deals, they tend to increase the billability of the people working in them, and of course the predictability of the business. As you know, Nixu's business model has been that we are serving quite a lot of clients, almost 400 clients yearly, and delivering a lot of assignments, hundreds of assignments every year. So the average size of the assignments have been quite small, and in these types of frame agreements, of course, the size is rapidly rising, and that helps us in internal efficiency as well. Any questions and comments, by the way, if you want, just shout out. We have a microphone there. Hanna, if you can keep.
Hi, it's Matti Rikonen, Carnegie. Just about the triangle that you show in the picture, I was wondering that which companies would you be thinking about when you mention price as the one element in the triangle?
In cybersecurity space, the good thing is that there is not that heavy price competition right now. Of course, due to the lack of resources and lack of talent and so on. But if we consider, for example, the managed security services and SOC monitoring and so on, our CDC is definitely a premium sort of product. So it's meant for clients that take the cybersecurity really seriously, and they really want to get results. On the same space, you can get much cheaper solutions for the monitoring as well. And typically these sorts of solutions come from the operators or small companies that are serving medium-sized companies and so on. And I think typically then they are more technology vendor related. So it's more like selling the technology and saying that this technology will monitor you and goodbye. And it doesn't include the human element as much as maybe our service does and so on. But maybe not mentioning any names here. So.
Okay, maybe then further to the triangle. I was just wondering that since you put product in one category, and I'm thinking that there are many service companies like you, where does the service element come in in the triangle? I don't quite
well,
fit it
yeah, I guess
properly in any position.
I guess this strategy triangle typically, as much as at least I understand about it, I guess the product is meaning of the quality. So what you are competing with, are you competing with the client relations? Are you competing with the quality of your service or a product? Or are you competing with the lowest price in generic terms? And I guess that's the point that at least I have here in comparing to service companies. And by that I would mean that if you are a cybersecurity company that focuses on one niche service, let's say that you are a penetration testing company or so on, then probably your penetration testing services are top of the notch, at least if you want to survive in the market. But then that's the only thing that you do and you focus on that. Whereas Nixu is a holistic service provider. So of course we believe that our quality in our services is comparable to these companies that are focusing only on one service element and so on. But that's not the way where we compete. I think we are competing with the holisticness of our services and the client relationship that we can provide with. That's the thinking here.
All right, thanks.
Mikael Rautanen, Inderes. In these 15 million size deals, are you mainly targeting global enterprises, or is it more like local big enterprises? So what kind of clients are you targeting there?
Local SME market? No, no. Obviously, the kind of size of the organizations that can purchase a 15 million euro frame agreement for 3 years, it's still limited, and it must be a larger entities, and then of course typically entities that have some business reason for doing it. And I'll come back to that. That's later when talking about the refresh strategy and so on.
What I'm trying to understand is, if the client is global, do you have competitive advantage against your global peers?
I think that we still probably have a challenge in competing for clients that don't have the headquarters where we are located or where we have offices in our market area. So we are mainly targeting clients that have their headquarters, or at least cybersecurity headquarters, near our offices or in those markets where we are operating, meaning mainly Finland, Sweden and Netherlands at this moment. I think other than that it is hard because, again, this client intimacy. If you are not near the client, decision makers, then it's hard to win that. And of course, I think the 50 million euros still, it's not something that I can promise that next year we'll have more of these. I think this is a unique size, and maybe this couple of million type of cases is the more typical on the longer run, which we are aiming to have. Good. Thank you for the questions, and please interrupt. Okay, and before anyone can ask about the profitability, I think that will surface, and I'll go through that a little bit. So as we've been telling earlier, we are of course investing into growth right now. We see that this cybersecurity market is still on the move. There's a lot of consolidation happening. There's a lot of positions to be gained, and I think that's why it's the time now to invest into that growth by, of course, raising capital when needed, but also utilizing our free cash flow from the operations for that. But of course, we've said that we aim to keep the EBITDA on the flat figures, so we are not aiming to bleed the company. And obviously, during this first half, we can see that our investments piled too high, and we made an EBITDA loss of 600,000 euros, and that was too high. I think that we should have saved some cost there. Mainly where this loss come from, there's the international expansion. So we are still in the phase where Finland is the cash cow that is feeding the international markets, and the other markets are bleeding, somewhat intentionally, but of course maybe in the level where it shouldn't be. So we need to tune that up, and I'll come back to that later. Then of course we had one-time cost, the stock listing preparations for this first half, which cost us money, and then we are now a main listed company. In case you didn't know this, but that's also part of the growth strategy. We feel that we need to be able to raise capital in order to continue the growth of the company, and in the main list we are of course more recognized in the international circles, both by the clients and by the investors. And then of course we saw as well that we are going to grow, and then becoming a main list company at some point is inevitable, and then I think that transfer is easier to do when you are a little bit smaller and you don't have that heavy corporate structure, for example, and so on. And that's why we chose to take that initiative now. And Janne Kärkkäinen, our CFO, who is here present us now, has been losing all his hair do this process.
Not much to lose.
Then we've continued our development of technology-based services, the CDC service again, that's growing quite nicely, and we are still investing into that. And of course our platforms as well, our One Nixu platform, which is intended to digitalize our own business model. So we want to provide a platform on which we are providing our services. And that does cost money. And then upfront recruitment in Finland, where we could have probably planned a little bit more carefully. So we recruited more than we could get into projects immediately. So those were the main reasons for low EBITDA. Yes.
Yeah, Matti Riikonen, Carnegie. Maybe some clarification related to the costs. I'm just wondering what of the costs would be kind of recurring costs and what are really non-recurring? I understand that stock listing only happens once, but the development of technology-based services, is that the kind of ongoing cost, or have you used some external resources in this quarter that you can basically take away in the following quarters, or is it also kind of recurring base that you are having?
I'll touch that on the next slide a little bit, but I'll answer that. So if you may, I'll take the next slide and continue on that. Did you, Mikael, have something relating to that or on the same theme? Okay, maybe let's take those questions after this slide. So obviously, as I said, we want to be on the black figures on the EBITDA side. So the plan is that we return the black numbers for EBITDA during H2, and as you've seen the guidance, we are saying that during this year we are expecting a low profitability but still above zero. And where that change will mainly come, it will be increased profitability in international markets, so getting those in better balance, but still continuing the growth investment. Stock listing is of course now completed, so that is a non-recurring cost that's going away, and then increasing the utilization for Finnish team, which is, as said, a cash cow for that. And the kind of the good thing here is, as I said in earlier result reviews, is that the balance between the client prices and salaries remains stable. So we are in a place where we are able to make the profits, should we want to, but then it's a matter of where we choose to invest. And answering Matti's question earlier, yes, the other things are sort of recurring. So we are continuing the development of the technology platforms and so on. And yes, we are utilizing third-party resources in doing it, so we can control the matter that how much do we want to put into that space and how much we don't. So it's a matter of control question as well. So there is a possibility for doing it. And then of course we have a good pipeline of cases. We have a large cases starting and so on. So then it's maybe a matter of controlling the resourcing and making sure that people are in billable work and so on is a thing that we need to be in better shape. But it's been busy months, so I may give our team some compliments still that you cannot always get things in correct place. But the main thing here is that this kind of operating balance is in good shape. So that's not going anywhere. Any questions, Mikael?
So I assume that the companies you have acquired abroad have been, well, not highly profitable, but still profitable. And now if I calculate it correctly, your international operations are having EBITDA of minus 15%. So what has happened abroad that the profitability is so weak?
Yeah, it's a good question, and which doesn't have only one answer, obviously, as many complex things don't. In Sweden, as we've discussed earlier, Sweden, the model of delivering cybersecurity services has been very much reliant on personnel resourcing, meaning that you resource individual consultants to the client, and then they are there, and then they invoice their whole time to that client, which is a different operating model that we are trying to do in Nixu in general. So in Sweden, for example, we've been trying to change that model into selling services and teams. But obviously when you take a person away from a resource hiring assignment which doesn't command that high hourly rate because the rate negotiation power is quite small, then you tend to lose the utilization a little bit, but you haven't been able to raise the price yet. And that's the transformation that, for example, in Sweden, we are doing right now. And that's happening. In Netherlands, we are still struggling with getting a good client presence with the clients. We've hired people, and we don't want to kind of lose good people that we have, but the utilization levels there are not as good as they could be. So that's the main reason there, kind of sales struggles. And of course, then the kind of the main thing for these international acquisitions has been to drive the growth. So they've been growth platforms. So of course, as we said, the plan has been to utilize their profits in growing. But of course, maybe we are now a little bit deeper than we would have thought we, and that's why we are also going to increase that profitability for the second half. More questions? We can have them at the end as well. Yes, so I wish I had a pointer that would work. Yes, strategy refresh for 2018. So what to expect, and of course repeating myself from the Capital Markets Day a little bit, but I've heard that a good message is worth repeating, so people get the message. We changed our vision only a little bit. We added this cybersecurity service for digitalization in that vision statement, meaning that we aim to be the best provider for digitalization in Northern Europe, and of course the best place to work for cybersecurity professionals in the future. And what do we mean by this? We have a marketing slogan called digitalization done right, meaning that as companies are now investing more and more into digital transformation, it means that they do need to take cybersecurity more seriously. And we actually are in a quite unique position by having the core cybersecurity services, having the digital identity services, and having the privacy services there. And these are all elements that are needed when you are building some consumer-related digital service, or even industrial-related digital service. And again, this kind of holistic service portfolio for this type of approach is now what we can offer to our clients. And how we see that will happen in the future is that if this is the traditional pyramid that we had, where the corporate IT, which is actually, when we are looking at many of the competitors in the cybersecurity area, this is still the only market that our competitors are talking about, that they are addressing. And that's mainly because the competitors only have products and services that are suited for this segment. Digital business, digital transformation doesn't need antivirus, doesn't need firewalls, doesn't need that sort of products. They are all sold to the corporate IT, and then the decision makers are in the corporate IT. We've been in this strategy period, we've been putting a lot of emphasis in gaining contacts within these spheres. So digital business, CDOs, heads of digital business, and then on the industrial side, CTOs and factory automation decision makers. And now they are gaining a lot of budgets in creating their own digital services in the world of IoT and in the world of e-commerce services, and which include digital identities and so on. And this is how we see that this transformation is already, of course, this is kind of starting phase where we started, and it's already going to this direction. And I think maybe don't calculate the areas in this picture, but it's more to give the perspective. So we aim to keep the corporate IT as it is, or even grow it a little bit, but we see that the most of the growth should be coming from the digital business and industrial IoT parts. And that is a market segment that we really don't see that many of our competitors are addressing. They are not talking about that. They are not offering that sort of services that would be of interest to these decision makers. And in this strategy period, we already have a lot of services that are suited for these decision makers, but now that's also the kind of the emphasis of when we are developing new services, when we are thinking what we are doing, when we are talking about what we are doing in marketing, this is the aim that we are doing. And why it's important is that these are the groups that are having the increased budget. The IT budgets are not growing that fast, but the digitalization budgets are definitely growing, and there's definitely a lot happening in that area. So that's the customer-wise strategic change. that's taking place. Any questions about this? Might be hard to understand when you are not in dialogue with the clients and their decision makers. But and in the refresh strategy, which is of course not very, there's no big changes. There's 4 main themes that I will talk about later. People is still very important, and we want to tap into the global talent community better than we have been able to tap earlier, both for recruitment reasons, but also for marketing and sales reasons. We want to be the cybersecurity partner for digitalization, so meaning that we are acting on business cases, not on risk-based purchases, but also acting on business enablement. Then our own platform, we want to build data-driven services built on platforms, and that means that we need to build services that are technology augmented, enabled by our own platform, and then when we are building new services, we are utilizing third-party platforms. And as this platformization is taking place in the world overall, we need to choose which are the winning platforms and build our services on top of those platforms. So we don't want to build everything from scratch ourselves. Expanding market presence, which we used to call the internationalization, is still there, and it means that in Northern European space we are still looking to grow our presence into new markets, and still of course M&A is a viable choice in continuing that path. Any questions on the strategy? No. And the last slide. So the guidance for this, well, of course, on the midterm, we haven't changed this overall guidance, so growing above 15% and being able to create more than 10% EBITDA. That's still there, even with these low EBITDA figures. For 2018, we expect to grow about 25%, which is driven by organic growth and earlier M&A. EBITDA will remain low, but slightly positive for this year. And of course, it's good to note that our boost from the M&A ends during the second half. So in second half, we don't have in our comparison numbers, there isn't any kind of M&A boost. So it's all organic growth, unless there is a new M&A cases happening. That concludes my presentation. Thank you very much. Any thoughts, questions, or comments? Take the microphone.
Matti Riikonen, Carnegie. Has your pace of recruitments remained pretty much the same over the past year? And I mean, it seems to be a common problem for all cybersecurity companies or IT services companies that there is clearly a shortage of resources, and it doesn't seem to go away. Actually, it should be getting worse and worse to get good people. How do you see that you are able to recruit in your operating countries, excluding the acquisitions? Because
I guess the right answer is not that we are desperately waiting for the artificial intelligence to solve our problem. So no, that's not the case. We've invested also in our recruitment capability. So we have recruited recruiters more than we have, but the kind of the recruitment pace, I think that has been the same or even growing. Our Chief People Officer Katja Müller is here as well, so you can ask more questions from her. But we've been able to recruit. Of course, it means that we need to recruit outside of the cybersecurity industry as well. But there, the good thing is that our size enables us to form teams where people can come in with a suitable background and they can pick up skills from other people within Nixu as well. So we are not only looking to hire people who've been in the industry for 10 years or so. And that's in this strategy framework, I think that's actually even more important when we are looking to support the digitalization. We really can't only hire cybersecurity people who are maybe also not always in the mindset that digitalization is a great thing. So it's good that we hire diversified talents in order to help our clients.
Right. Then if we think about your top line growth target of 15%, do you think that you are able to recruit new people in the same pace as your growth target? Or do you see that the growth should be coming from other revenue sources like at least increased utilization, maybe the managed services that would then require less people but provide more revenue. What's the split between the different kind of revenue drivers?
I don't have any detailed split announced or so on, but of course we have the strategy of scalable services, and that's what we are developing. Of course, it's only 9% right now of our total revenue, so building that up will take some time, but that of course will help us to scale the revenue other than that just scaling the headcount. Then of course there is some utilization effects now that we are growing fast. It's not as efficiently utilized maybe as it could be. But then of course we also need to recruit. We need to sell more value when we can, and so on. So there are many streams for it. But of course for this first half we still grew by 17% organically, and that of course was still most part due to human workforce and so on. But it's not still, we are not a huge player in that sense that if you have 350 people, there is still people that can be recruited. So it's not, I wouldn't say that's stopping our growth.
Okay.
About Cyber Defense Center, the run rate of revenue seems to be around 4 million at the moment. Can you give some color on how many clients do you have? I guess that's from Finland, the revenue, how many clients you have, and like how big is the market, how much there's still clients to acquire on that business?
Yeah, the revenue comes from at this point from Swedish and Finnish markets. Most of the clients are still in Finland, where our main focus has been, and the growth continues. It's amazing how everyone wants to get the detection right now, and of course that's the right way to go. There is too many cybersecurity incidents happening which the companies don't even notice, and there is still a, let's say, virgin market, that there are entities, organizations that don't have the monitoring capability at all. And then, of course, there is a lot of organizations who have purchased detection capability a few years ago, for example, but are not happy with that. And that's actually maybe the latest victories that we've had from global Finnish enterprises have been cases where they are changing they've used a detection capability from their IT vendor, and they haven't been happy with that, and now they are changing that to our service. So there is also this sort of transformation. I wouldn't say that the market is limiting our growth in that area at all right now, but I don't have a market size estimations, as discussed earlier, are quite hard to do in this space.
If you think about Finnish market, is this something that is relevant service for the top 100 companies or top 500 or even?
I think our main target space is the top 100 companies, and then of course the public sector entities that are comparable in size. At least right now, that's the main thing, and in that area we still have growth to be done. Good. Any more questions?
If I may continue still on that one, so have you seen that big clients, they have purchased some off-the-shelf products and now they are seeing that it's not working and they need to go to service provider like you in the Cyber Defense Center business?
I think most of this is maybe a hard question to answer without going into too technical level, but I would say that most of the clients are running some technologies in their own space, like IDS sensors or some part of this monitoring stack, you would say. But they are typically insufficient in noticing, and then they don't have, even if these technologies are providing some alerts, they don't have people who would actually take any action on those alerts. And that's like the whole concept of just buying a technology is not working, and that's why you need a service. And then of course then there are different levels of services and different levels of things to be done. So maybe that's the case. But yes, I guess most of the companies that have purchased the service have had some investment in this area. At least they have bought some technologies and they've thought that this will solve their issue, but it hasn't. So that's the case.
Thanks.
Yeah.
since you haven't talked about your kind of operating countries in specific, could you give a brief update on what's happening in your each of operating countries? What's kind of the driving forces and successes, and if not?
Yeah, so the operating countries, the main markets where we are active right now are of course Finland, and then Sweden and the Netherlands. Then we are also generating revenue from USA and from China, and then some other countries as well. I think they are stated in our IFRS report that what are the countries where we are getting the revenue from, and of course they are based from the home country of the client. But our main operations, of course, are in those three countries. In Finland, of course, as said earlier, that is a market that's a cash cow that's moving nicely, where of course our brand recognition is the best, and we have most of the consultants. In Sweden, the market is pretty much the same as in earlier reviews, so it is still unconsolidated market. There's a lot of players, a lot of companies, and with the team size that we have currently, I think we are in nicely positioned there, and we've been able to win and utilize those, let's say, cross-sell to the existing clients that we had through the acquisitions. And in that sense, the acquisition strategy has been quite good, that we gained client access to large entities in the Swedish market, and that's been quite good. Sweden is quite resource hiring oriented market, so the kind of the change to actually buying as a service things is the clients say that they want to do it, but then of course there's always a friction in actually making it happen. Netherlands, as said earlier, is a quite advanced market from the beginning, and there is a lot of competition, especially on the technical side. And there our challenge has been to kind of break the brand recognition levels and so on. Obviously, we are growing at quite fast pace, so the organic growth percentage is good there, but it comes with a considerable cost right now. We've recently launched, after the acquisition of ESSC last year, which provided digital identity support services, we've also widened the consultancy portfolio in Netherlands to the digital identity consultancy services. And that part is actually moving quite fast and nice. And the good part in digital identity services is that the projects are larger. So when you get things happening, they are larger assignments, larger project, and they typically have this continuation of support services. And the ESSC, it's good to understand that that's actually even being quite small, it's actually operating quite globally in the sense that it had offices. It has this low-cost center in Romania, and it has location in Boston, for example, and so on. And they are serving clients worldwide, so it's not only Dutch-based clients. Actually, most of their revenue comes from outside of Netherlands, and that explains a little bit the widespread also of revenue from other clients. And that integration has been now happening into Nixu's existing support services and so on. But we maybe haven't gained the most, let's say, cross-selling capabilities in their existing clients yet. That's still to be done. But all of these markets where we are operating, I think they are growing. I think there is a demand for cybersecurity services. I think the client reasoning for buying these services is pretty much the same. So there is no need to kind of really position somewhat differently into these markets. Hope that answered the question a little bit. Good, we are getting a whole. It's good to have analysts in the review. You get a good questions and good dialogue. Anything more? If not, I think we are ending this webcast session at least, and available for further questions here on site. Thank you everyone over the webcast, and thank you everyone here present. Thank you.